Hi, I'm Sean Henry with ARA in Atlanta, Georgia. You know, the apartment market here in Atlanta is continuing on its recovery. The data we are seeing demonstrates the bottom of this market occurred in 2009 or 2010, depending on how you look at it. Since that time, vacancies have been decreasing and occupancies are solidly in the mid-90s. Concessions have been burning off and we are seeing real rent growth. Some higher-end properties are even signing new leases at rent levels that are approaching historically high levels. Many multifamily investors we talk to are telling us their portfolios are showing significant signs of improvement. This positive performance logically leads some investors to want to expand their portfolios in this market. So when I ask them what they want to see, almost always the answer comes back: we would like to see properties that are well-built, stabilized, newer product in submarkets where we think there will be positive rent growth, and we would like to acquire those properties at below replacement cost values. Now that's a tall order for sure, but today I want to tell you about an opportunity that fits that description perfectly. The 626 Dekalb on the Beltline. The 626 Dekalb is a 204 apartment home property that was constructed in 2007. The property is located in the old 4th Ward Inman Park neighborhood in the urban core of Atlanta. ARA is offering this property with an asking price of $21 million, which is just under $103,000 per unit. This is unquestionably a significant discount to replacement costs. This represents an extraordinary value. Are you interested yet? Let's take a closer look at some of the dynamics of this particular submarket. The Midtown apartment submarket has seen explosive growth over the past 10 years. This submarket has actually doubled in size from inventory of 7,580 apartments in 2001 to a current inventory of 15,250 apartments today. Take a look at this aerial taken in 2002. This is specifically the neighborhood area of the 626 Dekalb apartments. The old 4th Ward Inman Park neighborhoods are anchored by the new Beltline development. The Beltline is a 22-mile park that is currently under development, and upon completion will circle downtown and connect 45 neighborhoods together. This aerial here shows 11 sites as they existed in 2002. Many, including the 626 Dekalb apartments, sit alongside the new Beltline. Now, if we look at this same aerial in 2011, we can see that all 11 of these sites have been redeveloped into multifamily properties. In addition to this private redevelopment, the old 4th Ward Park and a significant portion of the Beltline have also been completed by 2011. The portion of the Beltline that the 626 Dekalb apartments sit on has not been completed yet, but you can see the progress is headed in this direction. When you look at these aerials and consider the time frame in which many of these properties delivered into the market in late 2008, 2009, and 2010, as if leasing up during the worst recession of our lives was not difficult enough, these properties also faced fierce competition from each other. The properties have now achieved stabilized occupancies, but many of the weaker rents from this difficult lease-up period continue to plague the rent rolls. I believe this entire submarket is leased at below market rent levels. When considering these facts, it is difficult to conclude anything other than this submarket, and specifically the 626 Dekalb, are ripe for significant rental increases. This fact is further supported by rent currently being achieved at some high-profile deals within this submarket, like the Post Biltmore, which is currently achieving $1.72 rents. The in-place rents at 626 Dekalb are currently $1.04. Now, this property may never be on par with Post Biltmore, but this begs the question: should Post Biltmore actually command rents with a 70% premium to 626 Dekalb? Or can 626 increase rents to reduce this premium to a more palatable 20 or 30%? To answer that question, we really need to focus our attention on the demand side of the equation. The Midtown submarket growth is not anticipated to slow down. One example of this growth was presented in a report commissioned by the Board of Regents of the University System of Georgia. This report demonstrated a strong trend of increasing demand not only for college-bound students, but also a desire by those students for an urban experience. If the current college-going patterns continue, Atlanta can expect to add 70,000 more students by the year 2020. That is not to say that all new residents will be college students, far from it. As the students graduate and the current new urbanism trend continues, the population of people living in the urban Atlanta core will soar. In fact, the demographic reports we pulled from Claritas project the population within 1 mile of 626 Dekalb to grow 13% over the next 5 years. Atlanta has recognized the need to move towards a 24-hour urban city where people can live, work, and play. This transition has come a very long way in the past 10 years, as we can see from the development in the 626 Dekalb neighborhoods. But this is the beginning of this long trend, which has both public and private support in Atlanta. I believe the 626 apartments are very well positioned to be a beneficiary of these positive trends. When I compare this investment to so many others in the marketplace, the value here and relative safety of the equity investment really make this opportunity stand out. If this sounds like the type of investment that fits with your firm's investment criteria, then I invite you to visit this property on our website at www.arausa.com/626Dekalb. Here you can electronically sign the confidentiality agreement, download the full offering memorandum, and the supporting financial details you will need for a complete investment analysis. I would be happy to set up a personal tour of 626 Dekalb. Just send me an email at henry@arausa.com or call me at 404-495-7308 to schedule. Thanks for watching.